What's up everyone, my name is Anthony and in this video I'm going to be going over a detailed analysis of the broader markets, and I'm also going to teach you about a very difficult pattern that is occurring right now which can really trip many traders up. So over the past few trading days we've had ridiculously choppy price action, so this means ups and downs within the market with no clear direction, as I've been trading sideways over the past week or so. And on the surface this can look extremely hard to read and analyze, but I'm going to dissect this price action for you step by step as best as I can. So before we start the analysis, I just wanted to say that I'm keeping track of the markets in real time and signaling all the information in my Discord server, so be sure to check that out, and I highly recommend joining if you haven't done so already. The link to join the Discord is down in the description below. So also be sure to hit that like button and that subscribe button if this technical analysis is useful for you in any way. So your support really means a lot to me, and it helps me know that you would like me to keep posting these type of videos and helping you learn technical analysis while keeping you updated with the price action of the broader markets. So now to get started, to understand current price action, let's take a quick look at what's been occurring on a broader time scale first. So if I take a look at the analysis, currently we're sitting in a 1, 2, 3, 4, 5, so we're currently in a fifth wave pattern. And I know there can be a lot of information on this chart, but I'm going to guide you through exactly what we're going to focus on in terms of the technical analysis. And so when I said before, we have a fifth wave right here, so we can further dissect this fifth wave. So if I go on a smaller time frame, we see that we can subdivide this fifth wave into more fifth waves. So over here, and we're currently sitting in a 1, 2, 3, 4, and now we're in a fifth wave of a fifth wave. So now that's pretty much all the analysis, broader analysis we need to know. So let's go down to the 3-minute time frame with the most recent price action. And this is where we've been really choppy over the past week or so. So to break this down, whenever you see really sideways motion that's up and down, this is clearly indicative of a complex correction. And this is a very rare pattern in terms of Elliott wave theory. So I'm going to break down what exactly that term means. And as you can see from this price action, this is an absolute nightmare to trade. Because if you take either position, so if you're either bullish or bearish, you're still going to get chopped up and caught up in this price action. Because for example, if you are bullish here, you might get a little bit of upside, but then it's going to immediately come down on you. And if you're bearish at this position, it's going to come down and bite you right back because it's going to go right up and you're going to lose that money. So no matter what position you take, you're going to lose money in this situation. So the best course of action to take is to not take any trades at all. And this, I know it sucks because this has been going on for a pretty long time, a few trading days. And I actually did exit some of my positions just because of this uncertainty in the markets. But right now, what we see in a complex correction is a WXY pattern. And a WXY pattern, what happens in the W wave first is a simple correction. So we have an ABC. And when you have an ABC correction, you normally have some kind of impulsive wave push upwards. But what the X wave right here is, so this X wave is something called a failed impulse wave. And what this means is that price tried to start an impulse wave, but ultimately couldn't do that. So it came crashing down. And this is what forms the Y wave. So in a Y wave, this is just another correction. So here I labeled the Y wave as another ABC pattern. And if we look at these specific waves, our W was a flat correction. So we have a move down, a move up of the same magnitude, and then a move down with roughly the same magnitude as well. And then we came up for that failed impulse wave, and then came back down for another flat correction, what it looks like. And when I say flat, I mean that we came down for an A wave, came up for a B wave of the equal length, and then came down for a C wave, and that's where we're sitting right now. So the thing with complex corrections is that these can technically keep continuing and extending for a longer period of time. And if I show you right here, so we have all these lists of Elliott wave patterns in TradingView, and right now I used the Elliott double combo wave, which means a WXY like I showed you. We can also have a triple combo wave, which means that we can come for a W, X, Y, and then we can do it again. So we can have an X and then a Z. So as you can see, this is a nightmare to trade. You do not want to touch this at all. And the clear signal that you need to get out of this corrective pattern is a breakthrough of these trend lines pretty much. So for example, I've been leaning towards the bullish side, but I also have an alternate count for the bearish side as well. So if we start falling under these levels and we keep closing under this red line, that means that we're not being able to have enough bullish momentum to come up for another impulsive wave for the fifth wave. And what that means is if I break down recent price action, we see that we went up for a 1, down for a 2, and we went up for a 3, and this would be the fourth wave. And the reason why this is a fourth wave is because fourth waves can be complex corrections. And fourth waves also tend to be sideways motion, and that is exactly what a complex correction is. It's this really annoying sideways motion that ultimately gets you nowhere and that makes you lose money. So you don't want to trade this, you want to avoid this as much as possible. And you can't really do anything until you're out of this corrective pattern. So once you're out of this corrective pattern and we say we emerge bullish from this scenario, I anticipate a simple 1, 2, 3, 4, 5 upwards for the fifth wave. But for now, we have to just wait out this pattern. And currently I do see us on the verge of finishing that, but I do want to be safe with my trades. So I do have a possible scenario where we do fall under this trend line and come down for a harsher retracement to these levels. But I would say right about now, that's about a 20% chance of happening. I do see an 80% chance of us going up to the bullish side, but that's only after we get out of this sideways correction. And if I go to the triple Qs, which is for the NASDAQ, we see the exact same price action as well. We have also a WXY forming, and this just means that we're trading sideways or just directionally. We have no really clear indication of whether we're bullish or bearish. So for the W, we have an ABC as well, and then the X is a failed impulse to the upside. So we tried pushing higher, and then we couldn't do it. We couldn't start this impulsive structure right here, so we came right back down for a Y wave. And this is just simply another correction. So, and it looks like this is forming some kind of flat or zigzag. It's not really that important to know the details of the Y wave. We just know that we're going to have another correction before we can push to the upside. And there's the same chance of us coming down if we break through these critical threshold levels, which would mean that we'll retrace a little bit longer. But I don't see this as a high probability target. I do see us coming up for a little bit more, and then we're going to come down. But that's for another time. For now, we're just focused on this complex correction and getting out of it. So with that said, let's look at some specific stock picks and what to do knowing that the markets are in this really rough period. So the first stock pick, or not stock pick, this is my first stock analysis that I'm going to do, and this is Tesla. So I got a lot of recommendations to do this, and specifically in Tesla, I'm very bearish on it right now. As we can see, a clear ABC wave forming. So what this means is that Tesla is doing a zigzag correction, which just means a pretty sharp retracement. And we've already gotten that since the highs around February. So we see a clear 1, 2, 3, 4, 5 impulsive structure for the A wave, and then an A, B, C for the B wave. And these are just some day trades that I did. I leave these just for keeping track of my previous trades. But yeah, ignore these for now. This is just an ABC for the B wave. And now we're going to come down for the C wave. And when we have a C wave of an A, B, C correction, this forms another impulsive structure like the A wave. So we would expect to see some kind of possible like 1, 2, 3, 4, 5. And I can get some levels exactly where we might expect this C wave to stop. So let me do that right now. So I'm going to take out my Fibonacci trend-based extension tool, drag it down to the bottom of the A wave, up to the top of the B wave right here. And we get some key levels right around here. So the ones I'm targeting mainly are the 0.618 and 0.786, and that's where I happen to mark the end of the C wave. So I expect us to stop around these levels, but for now, this area of downwards motion looks like pretty good profits to be made if we trade puts, but because Tesla is so volatile and dangerous to trade, I'm going to, for now, hesitate towards getting into option plays on Tesla, but if I do see a good opportunity, I will definitely signal that in the Discord. So that's Tesla right now, definitely bearish, looks like we need some more downside. So next on the list is Salesforce. And Salesforce, on the other hand, I'm still pretty bullish about, but I did want to exit some of my positions and lessen the leverage of my options just because of the recent choppiness in the markets. And I don't want to be caught up in bullish plays when we do have this complex correction going on here. Because like I said, this can keep extending to form more sideways choppiness, and we don't really know when we'll exit out of it until it tells us that we'll exit out of it. And I didn't mention this, but the main signal that we're in the bullish case is if we just simply break through these highs. So if we break through 420 I know that number is kind of funny, but if we do break through 420 and we close above it, this could indicate that we're going to be on this move up for the fifth wave. So yeah, I'll definitely update that in the YouTube as well as in the Discord if we do see that price action. So back to Salesforce, we do see us coming down for a second wave within this third wave pattern, but I don't want to hold that many contracts as I was previously, just because I'm not sure what the market conditions are in the future for the next couple of days or so. And we have a very clear invalidation point of this wave count. So if we fall under 227 and we close under it, then this wave count is invalidated. And I will definitely keep that updated. But for now, I think we'll be able to hold this low right here and push upwards. But yeah, I'll definitely keep that updated. And I'm still bullish, and I'm still holding half of my position that I was originally holding. So that's Salesforce. Next on the list is AstraZeneca. So this is one that I'm actually relatively bullish about. And because it's such a safe stock with very low implied volatility, which means that it doesn't swing up or down too fast, I like this pick because of the recent uncertainty in the markets. So I do see an impulsive structure forming. We have the one wave forming with the two coming down, and we recently broke out of this consolidation pattern. So I believe this would be the start of a third wave, which can be really good profits to be made. So within the first wave, we see a clear 1, 2, 3, 4, 5. And within this within the second wave, we do see that kind of choppy corrective mode appearance. And then I want to see some strong motion to the upside for the third wave. So that's why I'm not getting into options as of now. I did post a recommendation in the Discord for some possible option plays, but I do prefer getting into stocks for this for AstraZeneca over options. Also because the options don't have many people buying them, so the prices on the options can be a little bit weird. But yeah, for now, I'm bullish on the stock, and I highly recommend a stock pick. So getting to stocks for this. And next on the list would be General Electric. So I actually did post an options play in my Discord for the stock. And right now it's been trading a little bit sideways because of the recent choppiness in the markets. But I do see a clear impulsive structure forming. So a 1, 2, 3, 4, and then here's the fifth wave targets based on just simple Fibonacci trend-based extension levels. And this is what we see in a fifth wave. We get that choppy price action. It's not a very strict increase, but in the end, it should get to these levels. I do have a very clear cut loss target of around $12, and that means we just fell below the fourth wave. And I don't see that happening, but I will be keeping a close eye on General Electric. And if we are unable to push upwards in the future, I'll be a little bit concerned. But for now, I do see us being pretty bullish on the stock, especially with the given market conditions. I'm not expecting many stocks to be very bullish right now. And once we do see the push upwards for the fifth wave, we should see a lot of these stocks also following along, specifically like Salesforce, AstraZeneca, and General Electric being bullish as well. And also, I got some requests to do PayPal as well. And I actually do see a really good opportunity to trade this in the bearish scenario. So I'm very bearish on PayPal right now. We can see a clear ABC correction forming, just like Tesla. It's a very similar structure. And specifically, when we have an A wave, we have that 5-wave move impulsive structure. So 1, 2, 3, 4, 5. And then our B wave came up in an ABC. And then our C wave now will come down just like the A wave in an impulsive bearish structure. So that means we come down in 5 waves. So 1, 2, 3, 4, 5. And I already drew out some basic extension levels. All you need to do is just take the length of the A wave like so and drag it to the top of the B wave like that. And we can see some targets around here, so 0.618 to 0.786 around these levels. So this is about, in the end, maybe a 15% drop to trade. And so I'm definitely looking into trading puts on PayPal. And because the markets are a little bit volatile, I want to hold off for a bit for now, but I'm definitely eyeballing those, and I will signal those in the Discord as soon as I see their good opportunity to trade puts on stocks like PayPal. And I believe a lot of other stocks are also following the same pattern, in general doing an ABC. So for example, I can also look at NIO. So NIO, I do see us possibly coming up for a B wave because we didn't hit these key price levels yet. But in general, we're seeing the same structure of an ABC. So if we do start turning bearish on NIO, then this looks like a good opportunity for puts as well. But for now, I want to hold off on trading options just because of the market conditions. And once we get a clear direction as we emerge out of this complex correction, then it becomes a lot easier to trade riskier options on multiple stocks. So in terms of when I said many stocks are doing some kind of ABC correction, I want to bring up another example, which is Apple. So for those of you in the Discord, we know that we rode Apple all the way up. Let me show you from these levels, so around 118, 119, all the way up to these levels, so the mid 130s, and that was for triple 300% profits on options. And now I want to ride Apple all the way back down for the C wave. So just like previous stocks that I talked about, we do have another ABC correction forming what it looks like on Apple. And I actually did signal some puts in the Discord, and I do see us coming down more for a C wave. And this looks like a very, very easy trade. Apple tends to follow wave theory very well. So I can establish some price targets on this C wave downwards. All we need to do is take the top of this A wave down to the bottom, then up for the top of this B wave, and we get some very easy targets. So just like previously, we have the 0.618 and 0.786 as these main targets. And as you've noticed, these areas tend to have confluence with the bottom of the A wave. So the way the stock price motion works is that the C wave tends to have very heavy resistance around the bottom of the A wave, but then this bottom also happens to be around these key technical Fibonacci extension levels. So it happens to work out very well. So I do see us riding these puts down all the way to, let's see how many percentage points, maybe 10%. So that's a lot of money to be made. And I already started signaling them. And based on what we see in the broader markets, I'll either add to my position or constantly update on what I see happening, especially with these Apple puts. And just for some basic technical analysis, not regarding wave theory, we see that there's a simple level of resistance right here. So that's around 131. And we can see this because there's multiple touches at this line. So for example, we have a touch here, a touch here, a touch here, and we have reactions to this line. So once we do close under it, I expect us to fall. So we just keep falling and falling and falling until we have some resistance to stop it. But yeah, so that's my current outlook on Apple. I'm already in puts, and once we do close under it, I'm going to probably add to my position, and I will signal that in the Discord. So in terms of other stocks, we do have Net. So Net is also following this ABC type correction. So over here, we see an A, B, C downwards. And right now we're kind of trying to find that top. So I don't want to get into puts right now because I'm looking for some evidence that we are starting that C wave, such as for Apple. We do have the evidence that we're already starting to fall and roll over. And then we already had earnings, which were good, but we still didn't have a good reaction. So that's also hints to that bearish notation. And in terms of Net, I want to see a little bit more rolling over. And also with these puts, I want to throw out a little bit of a warning because if we do anticipate this slightly bullish run for the fifth wave, we can expect stocks like Net and Apple to have kind of like a mini bounce on the way up. So like the second wave up and then coming down for this third wave, fourth wave and fifth wave. But so this second wave, we will expect it to happen for any C wave downwards, and that includes Apple. So while we're in puts, we need to be aware that when we do have some kind of impulsive structure, there's going to be a second wave of retracement, and that might look really bad when you're in puts, like because it might be down, but that's just what you have to deal with when you're on an impulsive structure. And once again, that's why I'm trying to keep very close track of the markets on YouTube as well as in the Discord. So that's going to be a comprehensive update of everything that's going on and a lot of updates on specific stocks. And I'll keep refreshing on these in the Discord as well as on the YouTube. And for now, that's going to be it for this video, and I'll see you in the next one.